Gold is fulfilling its classic safe haven role right now as markets continue to digest last week's Brexit vote. But could that last? And what about London's status as a gold hub? Is it in jeopardy? We're talking with the World Gold Council's Juan Carlos Artigas, who joins us in studio. Juan Carlos, good to have you back.
Well, thanks for having me again.
So let's start by talking about this interest that we're seeing in gold. Can it last? What are you seeing here?
Look, I think that right now, as you mentioned at the beginning, gold is fulfilling its role as a safe haven, or the way that investors, when they are looking for a high-quality liquid asset to protect wealth, they typically go to assets like gold to do that, right? And this is what we're seeing. In the past, you and I have spoken about gold as a hedge against systemic risks or tail risks more than anything, right? And the fact that typically in periods where you see uncertainty and an event that can have an impact in more than one sector or more than one market, investors typically try to hedge some of that risk, and gold benefits from that. And I think that this is what we're seeing. Now, the reality is that even if the UK were to have votes to remain in the EU, we think that the case for gold was still very solid because it was not only, or the activity in gold so far hasn't been driven only by that. But this definitely solidifies the case and puts gold into the minds of many investors.
Well, looking at investment products, we're really seeing investors flock en masse into back gold in investment products. Does this interest convince you here?
Gold-backed ETFs have been accumulating fairly significant amounts of gold for the year, not only this time around. Granted, in June so far, they have added probably an additional 100 tons or so, maybe a little bit less. We will have the numbers at the end of the month, but that's significant. But if for those who are following the market, we published that in Q1, gold ETFs have accumulated about 350 tons of gold or so, right? The point being, I think that this is not just a one-off event. This is a continuation of many trends that are underpinning gold. Part of it related to interest rates and the Fed that is not likely going to increase rates anytime soon, but also higher uncertainty in the market, not only in the UK, but generally speaking.
Let's talk about London's gold status as a major hub here for the metal. Is it in jeopardy post-Brexit?
Look, I think that it's early to tell exactly what will happen overall in the UK. There's still, as you know, a period where people are trying to lay out the strategy and the next steps. The reality is that for the gold market, gold is a global market. There's trading happening around the world, and the infrastructure of the gold market has been expanding globally even before anything happened in the UK. So I think that gold will remain an asset that is traded around the world as it has, with various parts of the market strengthening as the market evolves.
Before I let you go, I know the World Gold Council is putting out their trends report later on this summer, but can you kind of give us a sneak peek as to what some of these trends are that you're seeing in the gold market?
Yes, as we saw, in Q1, and as we were just saying, in terms of activity from investment, I think that the investment demand continues to be fairly robust, not only from gold-backed ETFs, but there has also been a lot of activity in the bar and coin market. There has been more interest around the world, also as part of higher uncertainty, and we will get to see what happens with other markets like jewelry with respect to interest, but also higher prices.
Juan Carlos, thank you so much for stopping by. We look forward to the report.
Thanks so much for having us.
And thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.